Something happened in the silver market this week that most people completely missed. And I don't mean the kind of thing that makes a small headline on some financial blog that 10 people read before breakfast. I mean the kind of thing that, historically, has preceded some of the most explosive wealth transfers in modern economic history. The kind of signal that, once you understand it, you will not be able to stop thinking about. Now, I know that sounds dramatic. It sounds like the kind of breathless line you hear before someone tries to sell you something. But stay with me, because I'm not here to sell you anything. I'm here to show you exactly what happened, why it matters, and why a growing number of serious financial analysts, people who have been quietly watching this market for decades, are now saying out loud what they once only whispered in private. Silver just flashed a rare market signal, the kind that has only appeared a handful of times in the last 50 years. And if you understand what it means, you will have information that the vast majority of everyday investors simply don't have. So don't go anywhere. Because by the end of this video, you're going to see the full picture. And the full picture is something you genuinely need to understand right now. Before we go any further, if you're new to this channel, welcome. My name is John, and here at John AG 1.0, we break down complex financial stories into clear, honest human language. If this kind of content is valuable to you, take 2 seconds right now and hit that like button. It costs you nothing, and it tells YouTube to show this to more people who need to hear it. And if you haven't subscribed yet, hit that subscribe button below and ring the bell so you never miss a video. We drop content like this regularly. Okay, let's get into it. To understand why this signal matters so much, we have to go back in time. Not hundreds of years, just a few decades. Because silver has a history, and that history has a pattern. In 1979, silver was trading at around $6 an ounce. It was a forgotten metal, boring, overlooked. The financial world was obsessing over oil, over gold, over interest rates that had gone completely off the rails. Nobody was talking about silver. And then, within about 14 months, silver shot up to $50 an ounce. That's roughly an 830% move. In 14 months, the people who understood the signal that preceded that move made life-changing money. The people who dismissed it missed one of the greatest commodity runs in recorded history. Now, fast forward to 2010 and 2011, silver was trading around $17 in early 2010. Again, it was barely mentioned. The world was recovering from the financial crisis. People were scared. And then silver did it again. It climbed from $17 all the way to just under $50 an ounce by April of 2011, nearly a 300% gain in roughly 18 months. And again, the people who saw the signal early were rewarded enormously. The people who laughed at silver investors in January of 2010 were very quiet by April of 2011. We are now sitting in a moment that experienced analysts are comparing to both of those periods, and here is why. Silver recently broke through what traders call a multi-decade resistance zone, a price ceiling that has been tested and rejected multiple times over the last 40 years. When a market breaks through a resistance level that strong, it doesn't just signal a price move. It signals a fundamental shift in how the world values that asset. And the number that is now circulating in serious financial conversations, the number that analysts are pointing to as a realistic near-term target, is $93 per ounce. Not in some fantasy scenario, not in a collapse of civilization panic. In a scenario that is increasingly being described as the base case. Now, let me be very clear here, because context matters. None of this is financial advice. I'm not a certified financial advisor. Everything I'm sharing with you today is for informational and educational purposes only. Always do your own research and consult a qualified professional before making any investment decisions. That said, the information itself, the facts, the signals, the historical patterns, those are worth understanding regardless of what you choose to do with them. So let's talk about why $93 is the number that keeps coming up. There are 3 major forces converging right now on the silver market. And when these 3 forces hit at the same time, the math gets very uncomfortable for anyone who has been shorting this metal or simply ignoring it. The first force is industrial demand, and it is absolutely exploding. Silver is not just a precious metal that sits in vaults or gets made into jewelry. Silver is the most electrically conductive metal on Earth. It is literally irreplaceable in solar panels. Every solar panel made today requires silver. Every electric vehicle charging circuit uses silver. Every 5G antenna has silver in it. Every advanced medical device, every missile guidance system, every semiconductor, silver is in all of it. And here is the critical piece of information. The solar energy industry alone is now consuming more silver every single year than all the silver mines in the world combined are producing. Read that again. The solar industry alone is using more silver than the entire world is mining. That is not a sustainable equation. That is a supply crisis happening in slow motion, and most people are still sleeping through it. The second force is the gold to silver ratio. This is one of the oldest and most reliable indicators in commodities analysis. Historically, the natural ratio of gold to silver in the Earth's crust is approximately 15 to 1, meaning there are about 15 ounces of silver for every 1 ounce of gold in the ground. Yet in the market today, the ratio has been sitting well above 80 to 1 for an extended period. What that means, in plain English, is that silver is historically, fundamentally deeply undervalued relative to gold. Every time in history that the gold to silver ratio has stretched this far beyond its historical average, silver has corrected violently to the upside. Violently. We are currently sitting in one of the most stretched ratios in modern history, and the rubber band, as analysts like to say, always snaps back. The third force, and this one is the one that makes serious investors genuinely nervous, is the paper silver market. Here is something that most people do not know. For every 1 ounce of physical silver that exists in verified, deliverable form, there are somewhere between 100 and 300 ounces of paper silver, contracts, derivatives, ETF promises, trading in the market. 100 to 300 paper ounces for every 1 real ounce. That is not a system built on solid ground. That is a system that functions entirely on the assumption that nobody will ever ask for their silver all at once. And what we are seeing right now, for the first time in years, is a meaningful increase in the number of institutions and large investors asking for physical delivery. When that trend accelerates, and the signal we are seeing suggests it is accelerating, the math becomes simple and brutal. There's not enough physical silver to honor all the paper claims. And when markets face that reality, they don't correct gradually. They reprice suddenly, dramatically, without warning for the people who weren't watching. Now here is where the story gets personal, because none of this matters if we don't connect it to the real world. Think about the average American family right now. Inflation has been eating purchasing power for years. Savings accounts are paying interest rates that don't come close to keeping up with real-world price increases. The stock market has had years of incredible gains, but a growing number of everyday people are starting to feel like they're always one correction away from losing ground. They can never recover. The financial anxiety in this country is real. It is widespread. And it is not irrational, because the system that was supposed to protect ordinary people's wealth has, for a long time now, been primarily designed to benefit those who already have the most. Understanding alternative assets, understanding what silver actually is, what it has historically done, and what the signals in the market are saying right now, that's not conspiracy thinking. That's financial literacy. And financial literacy, in 2025 and beyond, is one of the most powerful tools an ordinary person can have. What makes the $93 signal so striking is not just the price target itself. It is the combination of factors that are all converging at the same time. The industrial demand story is not speculative. It is measurable, documented, and accelerating. The gold to silver ratio imbalance is not an opinion. It is a mathematical fact, visible in any financial database on Earth. The paper to physical ratio in the silver market is not a rumor. It has been quietly acknowledged in regulatory filings and market structure analyses for years. What is new is that all three of these factors are now moving simultaneously, in the same direction, at a pace that is drawing serious institutional attention. When Goldman Sachs analysts start updating their silver price models, when central banks in Asia start increasing their physical silver reserves, when the major mining companies start reporting that new silver discoveries are rare and extraction costs are rising sharply, these are not coincidences. These are data points forming a pattern, and the pattern is the signal. Let me tell you what this kind of moment tends to feel like from inside it, because history is instructive here. In 1979, people who bought silver at $6 did not feel like geniuses. They felt uncertain. They read conflicting reports. They heard smart-sounding people dismiss the metal. The move didn't happen in a straight line. There were corrections, there were scary weeks, there were moments that tested conviction, but the underlying fundamentals were undeniable, and they eventually won. The same is true in 2010. The people who held through the volatility captured the full move. The people who panicked at the first correction and sold missed it entirely. Understanding the signal is only half the battle. The other half is having the context to hold on when the market tries to shake you loose. Now, I want to be honest with you about something. Nobody, not me, not the most sophisticated analyst on Wall Street, can tell you with certainty that silver will hit $93, or exactly when it will happen, or whether there will be a correction along the way. Markets are complex. Unpredictable forces exist. Policy decisions, geopolitical events, technological disruptions, any of these can affect the timeline. What I can tell you is that the structural case for silver has rarely been as compelling as it is right now. And the rare market signal that was just flashed, the combination of technical breakout, supply-demand imbalance, and institutional behavior shift, is the kind of thing that years from now people will look back at and say, that was the moment. That was when it was obvious, in hindsight, to anyone who was paying attention. Are you paying attention? Because that is really the only question that matters. Now, here's what I want to ask you directly before we wrap this up. I want to know what you think. Do you own any physical silver? Are you watching this market? Have you been following the gold to silver ratio? Or is this the first time you've heard the $93 target? Drop your answer in the comments below. I read every single comment on this channel, and the conversation in the comments section of these videos is always genuinely interesting. Your perspective matters. Maybe you've been following silver for years and you want to add something I didn't cover. Maybe you're brand new to this and you have questions. Either way, I want to hear from you. And if this video gave you something valuable to think about, if it opened a door to a topic you hadn't considered before, share it with someone you care about. Share it with a friend who talks about money, with a family member who is worried about their savings, with someone in your life who deserves to have access to this kind of information. You sharing this video is genuinely one of the most powerful ways you can help this channel keep doing what it does. Silver just flashed a rare market signal. $93 is the number the serious money is now watching. The industrial demand is real. The supply shortage is real. The paper market imbalance is real. And the history is clear about what happens when all three of these forces align. You now have the information. What you do with it is entirely up to you. But you can no longer say nobody told you. Stay curious, stay informed, and I'll see you in the next one.